Thank you for that introduction. Afternoon, everyone. Nice to be so close. I've been traveling a little bit, so it's nice to be only an hour from where I live. And I think Deborah's right. The insurance background is very important. I've got 2-inch thick plate armor skin and from being in the insurance business, so that's very useful background for talking about health reform across the country. So, oh, great. Okay, so there they are, and I probably have to do some clicking. I'm not quite sure. All right, I'm going to try, I way prefer responding to questions and interacting with a panel than lecturing to you. So I'm going to try to do 101, but do it fairly quickly. Just covering what do exchanges do. That's pretty basic. What are the options that states have very quickly, just kind of tee up some of the next conversation, including some early decisions that states, I think, are going to have to make based on the work I've done with my partners out in California. They have the first state authorizing legislation for the California Health Benefits Exchange that after some very, very tough lobbying back and forth up to, I think, about 2 hours before the deadline on September 30th, the governor was subject to, interestingly, whether or not to sign authorizing legislation for a state that in 2007, under the same governor, passed in the House and came close in the Senate to actually doing this kind of legislation on its own. And yet, when they got right down to it, it was very controversial. So I imagine in your states it's going to be all over the place, depending on whether they're red, blue, or in transition, mauve, I don't know. But here's some of the things that just, very quickly, just to lay a groundwork. We're really talking, the context of ACA is reform that basically is designed to cover a large swath, not by any means all, but a significant portion of the uninsured through increased public subsidies, mostly federal, although all the states are looking very carefully at what the impact is on them, not of the exchange and the tax credit so much, because that's really all federally paid for, but of Medicaid expansion and increased enrollment under the old eligibility rules as well in your Medicaid programs, which will be a financial burden on states. Employer mandates for those above 50 employees, guaranteed issue and renewal of insurance so that when somebody gets sick or even a pimple, they're not denied insurance. And adjusted community rating so that it's, somewhat reasonably affordable for older people as for younger people. And then, of course, the individual mandate. All of that, as I say, is really designed to get folks covered and, is that where we went? Okay. And create an insurance market that works. In case you're not steeped in insurance-ese, and I hope you're not, it's probably worth pausing for a moment on this individual requirement to participate. And there's lots of ways to talk about it, but just think about it this way. Absent that, and you're not in group insurance where it's highly subsidized by employer, you're basically have a situation where if the rating is kind of community adjusted, so it's not too onerous for old people versus young people, and it's a guaranteed issue situation. Why not wait like the individual who's a homeowner until your house is on fire to buy homeowners insurance? Why not wait until you know you're going to need a lot of services to buy health insurance, right? I mean, it's affordable now relative to somebody who's well. It's guaranteed issue. Why not just wait? So that individual requirement to participate is really a way of creating for households who aren't highly subsidized by the government or an employer a credible risk pool, a way to make insurance market work. So what does this exchange look like? It's kind of the shiny new thing, or the new thing, to paraphrase Michael Lewis, in health reform, and so it's getting a lot of attention. It's actually, I'd say, a modest-sized piece of Title I, which is one of 10 titles in the Affordable Care Act. We did it in Massachusetts. We have two exchanges. Here you see one for lower income, subsidized folks. There are 5 different health plans. They're all local, network-based health plans that serve this population, about 180,000 people that they serve through our exchange. And we're basically, the rate of premium subsidy is between about 70% at the high income range to 100% at the low end of the income range that we cover. So it's really our money. It's the federal state money. On average, about 90% paid for by public dollars. So, and it's isolated from the rest of the insurance market. So we really purchase it just like any other large employer would with their own money on an ASO basis, a self-insured basis. And we are very aggressive and we do very competitive purchasing is the way I would call it. That's not the model of an exchange under ACA, under the Affordable Care Act. An exchange under ACA, whether it's for individuals or for employees, is going to be part of the larger insurance market. So, for example, any discounting that a carrier would do for the exchange in your state for individuals or for employers, they would have to price the same outside of the exchange if they also offer outside the exchange. So it's very different in that regard. It's much more market-driven, if you will. Here's another one that is actually closer in concept to what I think a lot of the exchanges will be. This one grows a couple thousand every. It turns out the numbers here. It turns out it's a lot easier to give away health insurance than to sell it. Who knew? So we ramped up to 180,000 in about 9 or 12 months, and it's been pretty steady state ever since. This one started about 9 months later. This is completely unsubsidized. You can see there are more carriers, and there are actually more segments of the market. I like to remind the board that I used to work for, we're in the business of hawking insurance. That's our mission, to get people enrolled in insurance. And by the way, we don't get any administrative revenues unless we get people enrolled and we surcharge that transaction. So we actually think about this. It's an insurance store. If you want to boil it right down, what is an exchange? It's there's part of the population that's subsidized, but it's basically an insurance store. So we think about market segments, and we offer lots of choice. There's a whole big myth out there that you may have heard about Massachusetts versus Utah, and we can get into that if you want. We offer 9 health plans in Massachusetts. Utah offers 3. We've never turned down a health plan. Except one that begged us to turn them down. We do have the authority to be selective, but like any good retailer, anybody who runs a store, we're always making that judgment based on, well, are they adding value or not? And can consumers deal with yet a 10th choice or not? It's not about, gee, let's scrunch this down to the lowest price plan because we own this market, we own this population. We don't own them. They can get the same products outside the store. We have to win our customers in this exchange by better service and better offering. So we think about market segments, and we have lots of choice. So what do exchanges do? They basically do 5 things. And this is very important, the first one. They determine eligibility for a big swath of public subsidy. In Massachusetts, interestingly, we delegate that eligibility determination, low income, uninsured, okay, you're eligible. We delegate that to the existing Medicaid program in the state. They're already set up to do that. Under ACA, in your states, both the exchange folks who come in for a tax credit have to be determined eligible by the exchange. But in addition, the Medicaid eligibles, if they come into the exchange, they also have to be determined by the exchange for Medicaid eligibility. So just a little preview of what's coming in about 10 minutes. You're thinking, I don't want any piece of this. Let the feds do it. Okay, but you just let the feds decide who's going to be in your Medicaid program, who's going to get kicked out of your Medicaid program, and you're paying 50 to 30%, 25% of that bill. So an important function of determining eligibility. Secondly, enrolling the unsubsidized population. Again, we're selling insurance, and those are those target segments, whether they're individuals or small employers or whatever. Specifying what are you going to put on the shelf. Okay, so if the first section is the first function is the special qualified subsidized customers, and the second is identifying and bringing in the other customers. The third one is, okay, what do you stock on your shelf? Which plans do you sell? The ACA does set up some parameters, these precious or heavy metals, platinum, gold, silver, bronze, kind of levels of plans. Beyond that, do you want to sell HMOs? Do you want to sell PPOs? Do you want to sell something with a standardized cost sharing so that folks can compare Blue Cross and Aetna and Humana with one benefit package and think, okay, the difference in price really reflects something other than just different benefits? Or do you want lots of different benefits on the same so-called actuarial tier? How do you want to stock your shelves? And And we do, just to give you again some insight into the store function, we do monkey survey, we do focus groups. We are out there, them, I used to be there, every month. It is a customer-driven retail enterprise, which is, of course, an unusual, not a typical state function. And that has some real implications for how you want to staff and organize and think about an exchange, which is one of the first set of decisions that the states are going to face. Fourth function is then rating the health plans, deciding which carriers you want to deal with, or do you want to deal with all the carriers, and how you're going to rate them. Exchange is supposed to actually sort of give them ratings and rankings, and then sell the health plans. And then finally, there is a lot in the ACA that positions the exchange as playing a critical role in public education and outreach. And as you know, there's just tremendous anxiety and disquietude and curiosity and questions about health reform and how it's going to play out. It is also a very public-facing piece of health reform. So this is where the middle class, this is where the typical large voting participation segments of your population other than seniors are going to go for information. And they're going to have very high expectations. You know, the ACA, like in Massachusetts, says the plans in the exchange have to be priced the same as outside, but small employers sooner or later are going to be aware of this exchange, and they're going to be shopping there and saying, wait a minute, where's the better deal for me? I thought you were going to give me some relief. So like it or not, this is a very public-facing piece of reform, and if you own it, if you don't cede it to the feds, it's going to be the face of the state in health reform to the citizenry and the voters of your state. So it's I think even beyond the formal educational requirements on exchanges in the ACA, you're going to see a lot of expectations. So what does one of these things look like? Here's Massachusetts. It's not necessarily, you know, I'm going to make an excuse for Massachusetts because I think you'll see way better technology. I mean, I've already seen it being out and seeing some of the private sector exchanges. You're going to see this technology advance considerably over the next couple of years. I know Wisconsin's got some great stuff that they've got in development, and I've seen other stuff. But we had to lay the tracks as we drove the train. I literally they signed the legislation on April 12th. I gave my boss 3 days' notice. I started on June 4th, and we had to have our first major program, the one with 180,000 enrollees, up by October 1. So I started on June 4th. My first employee came on in July. We had enrollment up and going on October 1 for that program. So we were literally laying the track as we were driving the train. But it's not bad. So, you know, you can see you come in here as an individual or a young adult or an employee or employer or a broker. And Jacqueline, I'll tell you a little bit more about Jacqueline in a minute. And here are the 9 health plans that we offer. So we have these 2 different exchanges. 3 or 4 of the plans are in both exchanges, the subsidized and the unsubsidized. You can do all sorts of things. You want to find out more about health reform. We have literature there. But if you want to go shopping, you start here. And we need 3 pieces of information. And these are required to figure out what the price would be for your health plan. Okay, so it's community rated, but there's some variables still that influence the price. Your age. We have a 2-to-1 rating band, so a 60-year-old on average pays about twice as much as a 20-year-old for non-group, for individual coverage. You know, are you buying for yourself or yourself and a spouse, or what's your family size? Your zip code, because that's also a rating factor. So I went in reverse order. Your zip code, the size of the household unit, and your age. And basically, with those 3 pieces of information, we can tell you which of 3 to 5 carriers are available in your part of the state and what the price is going to be for any plan you pick. Now, I want to contrast the shopping experience. Then the next decision is, do you want a bronze, silver, or gold level plan? Those are fairly self-descriptive. You can probably guess gold costs more but covers more. Bronze costs less on a monthly basis but covers less, and you pay more of that, you know, out of pocket. And with that, you go shopping. So this example, and I think this is a place you'll see a lot clearer web pages being developed. where somebody picked the bronze option, and you can see the plans available to them. Interesting to look at the price variation. Now, these are exactly the same, almost exactly the same benefit packages, and you can go from $242 to $381. That's quite a spread. And guess where people tend to buy? In the open market, they buy a lot more of this, where it's hard to make a comparison, where there are a lot of intervening variables, where a lot of considerations, and in our market, they buy a lot more of this stuff at the lower price level. So it's not necessarily that we get a better price from neighborhood health plan in the exchange than outside, but we have organized a shopping experience that drives value-based purchasing. It's actually a really, really, really Republican concept, if you will allow. It's interesting, the folks who are most enthusiastic about it tend to glom up here in price, and the ones who are a little bit less tend to be down at the other end. I just want to contrast that experience with typical insurance purchasing in Massachusetts for a household pre-reform. So if you're a diligent shopper and you move into Massachusetts, or you lose a job and you're trying to get insurance, what's the process you would go through before we had this? This is a process that takes about 20 to 30 minutes for what, let's see if this is an individual and they pick the average price plan, that's times 12, that's a $3,500 a year decision. If it's a family, it's probably more like a $10,000 a year purchase. We did, I think you can do a kind of an apples to apples here in 20 to 30 minutes. Before the exchange, you move into Massachusetts, what do? You call up Blue Cross. They're the biggest plan, most well known. You know, you wait 5 or 10 minutes, you get a customer service person and say, I'd like to buy some insurance. And what have you got? And they say, well, we have 137 options. What would you like? And then you say, well, I don't know. Okay, well, let's narrow it down to 3. Most people buy these. And you ask a bunch of questions, right? And you're taking notes because you're really a diligent shopper, and this is going to be a $10,000 purchase for your family. And about 45 minutes later, an hour later, you get done. And then you say, okay, now I know something about Blue Cross. I'm going to call Tufts. And so you call them, and it takes another 5 or 10 minutes, and you go through the same conversation. And you think of 3 more questions you forgot to ask. Like, oh, gee, I know my doctor's in the plan, but it's my hospital, and I forgot to ask Blue Cross that. And you got a couple of pages of notes there, and then you call Harvard Pilgrim. And, you know, at the end of the morning, you throw up your hand, you walk across the street, and you just knock on your neighbor's door, and you say, what have you got? You know, I need to buy health insurance. What do you got? And that's how, in America, we make a $10,000 a year purchase decision. So people actually like this. You know, this is kind of a public service announcement about Massachusetts. Take my word for it, we're the greatest. But it's not just about the numbers, okay? It's, you know, here's Jacqueline. Jacqueline was one of our first enrollees. Jacqueline's story is pretty typical. She was a teacher in Norwood, Massachusetts, not too far north of Rhode Island. It can happen even in this small state. And she had insurance, but then she left her teaching job, went to work for a small restaurant, actually her family's restaurant, and had a lump in her breast and didn't get it followed up because she didn't have coverage. You know, like most small restaurants, they didn't offer group insurance. And it wasn't until she qualified on an income basis for coverage with Commonwealth Care that she got that followed up. And basically, one of 2 things would have happened if she hadn't been for health reform in Massachusetts. Either she would be dead, and you don't have to take my word for it, this is what Jacqueline will tell you, or her parents would have lost their house paying for the $100,000 worth of treatment for her breast cancer. Abby is in the Commonwealth Choice, the unsubsidized exchange. And Abby's moved here from an unnamed state located just north of D.C. and south of Delaware. And she is a sort of middle-class, upper-middle-class person, self-employed. She moved out west to the Berkshires and was told when she left Maryland that, like many states, she would not be able to get insurance because she had multiple chronic conditions, several chronic conditions. Not terribly ill, but a bunch of, diabetes and a couple of things. I mean, I don't know exactly what it was. And she was thrilled to be able to find au contraire when she moved here that, it's just a matter of getting on, putting in this information, and 20 to 30 minutes later having coverage. And that's, I still get, this is amazing, you probably won't believe this. Who would think of insurance? I still get stopped on the street or at parties, and people thank me, and I didn't have that much to do with it, that they can actually buy insurance for their son or their daughter who's between college and a job, for their family, that they could go out and start their own business. Because who can start a business if you need to buy health insurance and you can't get it if you have any illnesses? So that's very nice. Let me turn now. Hopefully you have some sense of what an exchange is. Let me turn a little bit now toward some of the early decisions that states are going to confront. And first of all, I think maybe to set that up, let me talk about what the exchange in your state under ACA, whether it's your exchange, your state's exchange, or you delegate that to a national or federal exchange run out of Washington, what they're going to do. They're going to enroll federally subsidized low-income legal residents for insurance, whether that's Medicaid, which you'll pay part of in your state, and that's a significant budget outlay, as we all know, for the states, or the tax credit, IRS-funded stuff. So you see the second one is Medicaid and CHIP. They're going to sell insurance to higher income folks. That's going to be to those who have choice and who vote in very high proportions. That's going to be the face of health reform in Wisconsin or California or Missouri or Mississippi or Vermont or Rhode Island. And for small employers looking for tax relief, there's a provision in ACA that very small employers with low-wage workers can get significant federal tax credits if, starting in 2014, they come through the exchange. This is going to be an opportunity for them to do that, the only way they can get those tax credits, and for other employers, small employers, an option that they'll be interested in. So that's kind of what's going to go on in your state starting in 2014, unless we get repeal and replace, although I'm still looking for what they mean by replace. And so it sets up some choices for you in your state if you decide to go forward. The first one, of course, is do you cede this to the feds or do you do it yourself? I'm hearing increasingly that progressive states that are enthusiastic about reform want to do it, and states that are scared of Washington and less interested and less historically focused on health reform also kind of want to control this. And so it'll be interesting to see who ends up saying, no, I want to cede it to the feds. There's some reasons to do it. A lot of nervousness about this. Can we really do it right? Is this act going to stand? Is Washington going to make us as states look bad by hemming us in? So why should we take responsibility? I'm not saying this is a walk in the park, this decision, but a pretty critical one. And then there's a second one in the law. You can set up a multi-state exchange. I have yet to meet anybody in a state who thinks, and I actually had the chair of one of the legislative committees in Rhode Island ask me in December, why don't we just glom on to Massachusetts? But, as we go through these wave elections and Democrats are looking across the border at Republicans, and then next election cycle it's reversed and so forth, it's hard for me to imagine, even with a lot of cross-border dynamics, and Massachusetts and Rhode Island, for example, have them, that a lot of folks are going to do this option. But it is an option. And then there's a big question about if you're going to do it in your own exchange, how does the exchange, how is that governed, and how does it interact with all the other state agencies, especially the Medicaid Department and the Department of Insurance that are very much in the same space. And I'll talk to you about some options there. Fourth, and I'm really thinking now about folks crafting legislation authorizing exchanges. So do you set it up in the Medicaid agency or somewhere else or on its own? If it's on its own, how is it governed? What are the policy goals? What do you really want this to do in your state, this exchange? Because it's a tool, and it can be used for a lot of different options. For example, there's going to be a lot of pressure on safety net providers, public hospitals and health centers. Do you want the exchange, as we go through an expansion nationally of 30 million newly insured, most of whom are going to be low income, do you want the exchange to actually help preserve, maintain, and enhance safety net providers? Not necessarily but how much focus there versus just getting the prices of the premiums of health insurance down as low as possible versus actually reaching beyond the health plans to try to transform the delivery of medical care so that it's more coordinated, it's safer for patients, et cetera. So there are a multiplicity of policy objectives, and I think it's going to be important for the legislation, if there is authorizing legislation, to call those out. Because in the end, there are going to be a lot of, change, as we all know, whether you believe in it or not, means a lot of discomfort So there's going to be a lot of argument about whether an exchange should do X, Y, or Z. It's very helpful for everybody to be able to see, well, here's the objectives that the legislature set for us, at least. What are some of the rules of the road? Is this going to be transparent? Is there going to be any protected information? Do the negotiations between an exchange and a set of brokers or health insurers or whomever, do those have to be carried out in public? So transparent, but how transparent? What's the funding source? Is there going to be any ability for an exchange to tap 1 cent of state dollars? Maybe the answer, maybe the answer should be no. It's a good place to spell it out. And then there's a whole set of thou shalt nots. Yes, thou shalt. Did I spell that right? I don't know. Thou shalt not. I think I didn't have that quite. It doesn't look right to me. The question is, how much do you, at the legislative level, want to take this market mechanism and say to it right up front, thou shalt not have the latitude to exclude any insurer from contracting. Thou shalt not have the latitude to select which brokers you want to work with. Thou shalt not have the latitude to do X, Y, or Z. And so you're going to get pressure to put in a lot of thou shalt nots, do anything that hurts me, in your legislation, and you're going to have to figure that out. My last slide, I think, yes, is just to illustrate this issue about kind of choices, policy options, tools with a couple of different models. So here's 4 different models that I think that I've already seen, and so I imagine there are more out there of how an exchange could work. You can have a standalone exchange with its own independent authority governing it. So it's a state agency, but it's really a public authority, not in the direct line of command with the governor. And that's the model in Massachusetts. That's also the model that was set up in California. And in both states, not that the exchange willy-nilly doesn't contract with a health plan. I just mentioned that we contract with 3 times as many as they do in Utah, where they're not allowed to not contract with them. We have the authority to. But having the authority gives the exchange a little leverage. So you'll hear a lot about this issue of selective contracting or not. I call it, frankly, competitive contracting, competitive procurement. Do you require health plans to compete to get onto the shelf, or is anybody who's kind of got a pulse eligible to be on the exchange shelf? If you're in the any willing provider, any willing health plan column, as Utah is, although 3 of their 6 major plans chose not to participate, then it probably doesn't make a lot of sense to integrate it with Medicaid or to have what I call this integrated super agency. So let me talk about those 2, and I'll explain why I didn't have anything in the lower right. So another model is to integrate very closely between the exchange and Medicaid. It doesn't necessarily have to be in the Medicaid agency. In fact, there's, I think, a lot of talk in Wisconsin about an independent authority, but very closely tied in with Medicaid, almost sort of 2 doors of the same program. And that seems to be some of the direction. Jason can correct me if I got that wrong. And then there's Oregon's approach, which is a super agency, where they're pooling as much public and quasi-public buying power as possible. So they've got the state employees, they've got Medicaid, they've got the new exchange, they've got municipal employees like teachers, all in. They're thinking 1 million people in the Oregon Health Authority, and they want to not necessarily have the same program for all those people, but coordinated strategies, procurement strategies to drive health reform in the state. Probably doesn't, if you're going to have on the right-hand side here, any willing health plan, any licensed health plan can participate. You don't have a lot of leverage, frankly, that you're allowed to exercise, so it probably doesn't make sense to integrate closely with Medicaid or state employees. Anyway, so those are some options, and hopefully I haven't wasted too much of your time, and I'll cede the podium.